as well as we are going to look at the sectors which are doing well and in which sector and stocks probably we can turn our eye on. This week again there's been a very spectacular rally. It looks as if some start of a new bull market rally, but still some way to go before we can declare that the bear market is over, because that has to be accompanied by certain fundamental factors. What is the major problem as far as the market, the stumbling block is, this time the liquidity is getting withdrawn. So even if the inflation is to peak, we will not get that sort of liquidity back into the system. So which means that the market, which is being supported by various reasons, one of course is the valuation, then second is the liquidity, third of course the free floating stock and individual stocks are concerned. So these are many reasons why the market goes up. One of the important factor that has been the liquidity, that is now going to be gone for many years now. And second issue is that the interest rates are going to be definitely much higher, by another 1.5% higher in India, approximately 2% in US. So these are major headwinds to the market rally. So at some stage there is a chance that the negatives may get recognized or get emphasized for a fall. That's a likely situation. But we never know about the market. These are present circumstances we are talking. There could be some positives also. One, of course, is the fall in crude price. Right now, crude is generally getting itself down, and we have seen that the crude oil is getting closer to the 200-day moving average. So $95 in Brent crude. The Brent crude, sorry. Brent crude now approximately $102. If it is going to fall below $95, then it could start a major downside in the market. So whether that is going to be driven by supply demand, we do not know, but there is something else which is happening, which probably is likely to bring the prices down. One of course is the possibility that at some stage this Russian-Ukraine war, which is going on for 4 or 5 months now, has to somewhere has to come to an end somewhere, and so the market will get adjusted to the new realities, and also the demand supply will get to such a level where probably there is a meaningful drop in crude prices, which can definitely bring inflation down globally. So whatever that's a peak, the inflation probably this month may be peaking if the crude prices is going to sustain this level, and so we will see even a steeper and gradual fall. First initially a steeper fall, then probably it can gradually settle down at some lower levels. So that will give some hope to the market, and probably get back some of the stocks which are trading at long-term average down higher. Now that is the reason we have seen that the consumption stocks have done well. Now for example, we have seen stocks like FMCG stocks, particularly led by HUL, which we spotted some time back. Then we have seen auto stocks, now Maruti, Tata Motors. So these are all really getting itself back. Now when the economy is doing well, generally the banking stocks do well, but we are not very sure that the economy on what relative measurement the market is making right now. Because generally the economic activity will definitely slow down compared to last fiscal. It will definitely slow down. But banking stocks, led in India by SBI and ICICI, because HDFC Bank has not participated in the present Nifty bank rally. There is the Kotak and the HDFC Bank have not participated, but SBI and ICICI have really pulled the Bank Nifty up, and Bank Nifty constitutes approximately 35% of Nifty component. So that weightage is really giving a big push to Nifty. The sectors which are really suffering right now, the IT sector, then we have got commodities, particularly metals. So these are the two sectors which are really still yet to go up. But in this itself, when we see the chart, we'll know that Infosys is gaining ground comparatively. There are stocks like Infosys is gaining ground. TCS is slightly showing some signs of recovery, but it has to take some more time up. Now that is one is because we are seeing a unique situation where the business is good, but the stock price is sliding. The reason is it is getting adjusted to a more realistic valuation levels, because Normally, when you grow at the level at which TCS and all is growing, to give it itself a 30 PE is a very high valuation. So when it comes to a longer term average of PE, that is maybe 10-15 years PE, when it comes down to that level, average PE, then we will see the market doing well. So for some period, there is a chance that the profits will grow, but the market having given already a high valuation, so there could be a slight movement, and as the profit grows, then the market will start, prices will start picking up in IT sector. That should be the overall theme. But fundamentally a very good sector right now, and so if it comes corrects to slightly the longer term valuation levels, IT should be definitely picked up. So look at this long term average of IT sector, and then look towards picking up for investment, because there is one sector which does not have any regulatory issues, very good strong cash flow, big order books. Question is now the prices are getting just adjusted because of from high valuation. That is all. Metals, because of the high, whenever the interest rates go up, it doesn't do well, and we have seen both precious metals as well as copper and other prices have started to slide down, which could happen. So I think better to avoid metals. Keep an eye on IT. Okay. So right now the sectors which are continuing to do well in this week: FMCG, auto, banks. So anybody now looking for short-term investment with tight stop losses could look at these three sectors. IT, fundamentally for investment when it comes to long-term average. Metals, please wait for a longer period of time. So this is the theme in which we should work. And also another thing is, on a comparative basis, I think both the Indian growth story and also the Indian market valuation and Indian stock prices, if you take index, I think they are now outperforming the global markets despite FIS pulling out. So that is the biggest advantages. Indian investors have come to the fore to rescue this market from a deep fall. FIS have been relentlessly selling in the last 1 year, particularly it intensified in this year from January till date. But despite all those things, the markets have not fallen to that extent. Now, for example, S&P went down to 3650 and it is over 3950. So 300 points, around 9% or so is the gain in this thing. Indian markets, which fell to 15,200, is 16,600. So 1,400 points, which is approximately the same 9 to 10%. Okay. So we have not, but if you look from the top of the fall, from 18.6, we are at 16.6. So 2,000 points, and 2,000 points is something like 11%. Like it is 11%. S&P was at one time 48.20, and today it is at 39.50. So you can see something like a 900 points fall, which is something like 17 to 18%, right? So we have from the peak, in fact we are corrected lower comparatively to the S&P. So that means we are still outperforming the S&P in a substantial manner. So that shows the premium that is still being attached to the Indian market compared to its peers. That is, when you talk about the peers, about the other Asian markets, including China, which are not doing, fundamentally they are all at much lower P's. FIS have shown interest in China, but they have not picked up to that extent that the Indian markets have picked up, which shows very clearly basically the strength in which we are growing, and also the earnings that is coming. Now, one reason why in the last couple of days we have seen rally is that, of course, it's supported by global factors also, and one particular reason is the earnings seasons in US also, and we have started getting some big this one like Netflix, some companies which have really come out with results. They have not lacked in any substantial manner, which was reflected earlier by consumer spending in US, so which are supporting the market. So we have to see what is going to be the guidance in future. We have to see to what extent the present impact of monetary policy as on consumer spending, which can have a drag on the earnings there. So the reason why there are negatives and positives in the market is, the negative that is coming out is the probably the liquidity withdrawal. Liquidity is a clear negative. Then the earnings which are till now good, will it be affected because of the monetary policy in future, which will have an impact on consumer spending. So this is something which we will know only from as the data comes, and we are very sure that the consumer spending will definitely get a hit because of high inflation, because of high interest cost. So this consumer spending will, if it will translate into hit in earnings, which should, and also along with the liquidity, is still a major headwind to the market, which is what makes us think that probably still there's a bear market correction and there could be a fall. These are the reasons. But what are the positives that it could be emerging is inflation is peaking. Probably very shortly we will see the inflation peak. So which means the market will guess that okay, let them raise interest rates, but at some stage that is going to come to an end. The second thing is whether Russia-Ukraine war, something will happen there, which could be positive. Then fall in crude price. So these are positive. So on balance, we have to keep a track on what is the likely impact, assess the situation, and decide about our own ways of investment and as well as the trading. Now, investment should be based on sound business, because if the business has structural problems, we should avoid it. But if the business is good, like for example IT, I think everything is good except that the valuation is correcting, which means at some stage when the valuation corrects to a long-term average, we should be an investor there. So if you have invested at some high level, average it out when the valuation falls very closer to the long-term average. So that is as far as investment is concerned. So keep a track on those things which have fallen very heavily, and those things when it comes to so that means value investing should take place whenever it comes to such a low level. So that is one thing which you should keep in mind, what we call as the value investment. Now if you look at the momentum investment, the momentum investing is now favoring banking stocks, it is favoring FMCG, it is favoring auto. So the momentum thing, you should definitely put stop losses, because since it have already valued, since the values have already risen a little substantially, we should be getting a little worried. So I think we should be looking towards chopping off those things at some higher levels. So you have to go slightly against the crowd, in the sense that the value investment will always grow against the crowd. If the values have run ahead of the growth, then in that case we should be in a position we should be paring down that, and we should be investing when the value comes to such a low level, which is probably the case where it could be into IT sector also. So in future. Now let us look at what's happening with respect to individual stocks and with respect to Nifty. Now we are very happy to note that how the trend lines have been very, very effective in even getting ourselves to short-term intraday trading prospect. Now before going to long term, I will put in okay, we will look at the long term and then look at the short term, which will give you even an intraday pick, how we picked up even the low of today. Now this is the pandemic low, and this is the last month low. So let us say we put the trend line from these levels. See, okay. So this trend line is going to be a very important one. This trend line is going to be important. Now this month I think it is will come to an end within 5-6 working days. So next month it should not cut 15,640, 650 levels, and I would put it, because this is 15,183 and this is 15,500, 300 points. So that means somewhere closer to 15,800 instead of 6. I think probably if you draw that properly, it may come to 15,800. So I see the market, the bear market getting emphasized only if it starts again falling below 15.8 next month. Only falling below 15.8 next month and progressively advancing by around 300 points on a month. Suppose next month it doesn't come to 15.8, the month after that it will be 16.1. It could be 16.1. So we are going to see a progressively probably this higher trend line, which has to be broken for us to get into some sort of a re-emphasizing of the bear market. Now let us say the same thing, if we project it, keep it to this high, then in that case this should become this place should become this trend line at a higher level should become resistance, and we expect that it should be something like 16,000 825 in this month, and next month no, it should be crossing 17,000. So 16,800 to 17,200 levels. So we expect that next month, this month it will be around the 16,800 high, closer to that, and next month it could be something like a 17,100. So these are two places which we have to look towards as to what's going to happen this month and next month. Okay, so if it let us say it goes 16, next month it goes up to 17.1, then be careful, because the 200-day moving average, you know, if we do the 200-day moving average, that's coming closer to the I'll remove this. $200-day moving average, let's draw. So this 200-day moving average now is coming closer to 17,055. Right now it's coming this. So this is going to be a very important place to watch for. Okay, so 17,050, 60 levels, probably if it's not this month, it could be probably somewhere next month. And if you see the Fibonacci ratio, let's put from somewhere here. So so now this is around 16,605. You can see the next one now, the 50% retracement, which is also very important, is the 16,800. So that's why I said somewhere closer to the 16,800, be careful about it. 16,800, 850 levels, you need to be careful. Then after that we have this the same thing, which is the 17,300 is a 61.8%, but this moving average is also coming. So 16,800, 850 is one place. Then probably 17.1 to 17.2 approximately, that could be the very important resistance levels to watch for. Now the fall has to now, since it has crossed this particular level, no, the fall has to now take place, which is even below the 16,000 mark. As far as Fibonacci ratio is concerned, we should be getting at least below the 15,995 or 16,000 for us to turn around into a bearish situation. So mostly I think we should be the most important stop losses which are going to come is going to be around the for the time being, it's around the 16,001. For those who are going with the tighter stop loss, will come to 16,275, because on a daily chart, if you go for this is a daily chart. So this pivot high, okay, so this is the important 16,271 is an important pivot high, and now it has crossed this particular level also. See, this is 16,700. If it goes to that, then even this place will become 16,435, also can become an important place. So I think right now we are looking something closer to the 16,000 this particular close, which is the 16,661, and today it has already come very closer to that. So we should be this high, which is going to be 16,800 levels. So it looks as if we will be getting very closer to one of this level of 16.8 or so. And then if it starts to fall below 16,000, if it goes to 16,800 or so, then if it starts to fall below 16,425, 400 levels, then in that case probably there could be a slightly bigger fall, targeting 16,200, 250 levels, 220, 230 levels it can be. And then we have to see how it behaves around that level for us to go. Now all the other shorter term moving averages are all clustered closer to the 16,000, 16,100, and it may hedge itself a little higher in days to come. So we are looking at the first stop loss to be this particular level, that is in a daily basis, this should be the first stop loss, that is 16,480. 16,480 is the first stop loss for those who are looking at very short stop losses. Then in that case, because this has gone above this high, we should keep this high, which is the 16,480, 490 levels. So if it falls below 16,480, 490, then it may become a little tricky as far as the upside is concerned for a slightly bigger fall. So then after that we have this particular level. The close is 16,220 levels or so. So then the fall has to be much below 16,220. So at this point of time we are keeping 16,220 because it rallied up to 16,600. All important corrections in this thing has come to around 400 points. So if we take about 400 points, so 16,200 to 20 is the place where probably we need to be careful initially. Then after that, right now it comes closer to the 16,000 mark. Okay, then of course it can get back closer to the 15.8 or so for next month. So I think we should look towards trading with a very clear set of objective. So what is our objective? If you're going to keep the stop losses tight, which we should do, then in that case we should keep this today's low as a stop loss. Now we also said last week how we can even use the trend line to detect the intraday so some sort of so we'll keep this. Okay, so this is a trend line, right? Because these are two important nearby lows which we are connected. So now let's look at this. So now when you keep the top, see this top, when you keep it at this top, you can see this is just tagging along these tops. So how many tops we have got along this line? 1, 2, 3, 4. So today it was come 16,626. Tomorrow you add another, because this trend line slope comes around 38 points. So 16,000, 15,000, 16,000 plus another 38 comes to 16,665. So tomorrow there is a chance that probably 16,665 can be a top. 16,665 can be a top. Okay, and this particular point which we talked about, see here, when we anchored it to this pivot I. Now this was the low. So today we could have easily detected that 16,480, 483 is an important support. Not that it will not break, but what we are saying is, right at the start of the trading itself, you could have measured that this is a very important place where the first support will come. So based on that, you can go for a long. Now today 16,483. Now the slope I told you is around 38 points. So you can add 16,483 plus 38. So 16,520. So what we are looking is tomorrow the range, the first range that we are talking about is 16,520 on the lower side, 16,665 on the upside. So this is the tomorrow's expected range. This is the first range that we are expecting. So if you want, you can buy at 16,520, put stop loss 16,480 if there is a fall. 16,665 if you want, since the trend is up, if you want, you can go for a hit at this level and probably put in a stop loss of 16,685 or 680 or 690, something like that. You can put some 20-30 points above this as a stop loss and trade for the downside. So this is the possibility for the daily thing. Now weekly, I told you that we are looking at okay, now if there is going to be any fall that is going to take place, now after this no, we should be looking at, right, so any fall up to this is going to be a buy. Okay, now this is coming the next 1, 2, 3, 4, 5 next 5 days. I think no, we are likely to get maximum 16,150 or 175 levels, so 16,200 or so. So for a bigger picture trading on a weekly basis, at this point of time, don't chase the market, because it's very important that even if it's a bull market, you should wait for some correction before you go for a buy. at this point of time, wait for a correction to happen, because it has already gone up from 800 points, 800 points. And in a situation like this, where if there is some sort of a small turnaround, there can be a fall of 300, 400 points, just 2-3 sessions it can happen. So wait for that fall to take place, and then wait for one day high to be cut before you go for a long. So at this point of time, in a weekly basis, we would suggest that no, you can wait, and let's put a weekly strategy, weekly this one. So the moment right now, it looks to be we will connect these two highs, right? So we are getting closer to this area. So this is the weekly thing, could be 16,680. Tomorrow is going to be a very important thing. If it goes up 16,680, I told you 670 or 680. This is going to be quite a very important place. And if it starts to fall, then in that case, no, you should wait for it to come to this level. That is, which we expect. Okay. So this particular line here, 16,210 or 220, which I told you. I think next week, if there is a fall, it could come up to 16,210, 220, from where it can rally. So on a weekly basis, also we are expecting first the 16,680 to 16,210. So this is the support resistance points which we are looking at immediately. So probably tomorrow, if there is some rally, it can get sold at, assuming it gets sold closer to 16,680. Then in that case, there can be a fall. Okay, and 27th July is the Fed meeting. So closer to that, markets can be a little bit nervous. And then post that, it can rally. So in case if there is some more hawkish comments on inflation by Fed, chances that there could be a fall which can slide run up to 16,210. So our weekly strategy would be is, since the trend is up, we don't want to sell at 16,680, but at the same time we need to be careful that about our existing long position, we need to look at 16,680, and then if a day high low is cut, if a day low is cut, then in that case we should come out. So for that reason, for tomorrow we will put stop loss of 16,520, and then later on we will put this is for Friday stop loss. Okay, on Monday our stop loss will be raised to 16,550 or so. So closer in this level, we will look towards the stop losses, and then we will wait for a fall which will happen closer to the 16,210, and then look towards going long on signs of recovery. So this is the thing. So we're not suggesting any strategy like option, because we want to go, we cannot afford to go against the market, but at the same time the market has heated up. So in the last 1 week, normally the rally in a weekly tends to be around 450 points, right? So 450 points should be the normal rally in this. So now already let's look at this week, Monday to Friday. We will look at it. So it is 16,140. 16,140 plus 450 points, 16,150 plus 16,600. So it is slightly extending itself on the upside, which means that probably at some stage the correction can come, because this is already on the verge of 450 to 460 points. Except on some weeks where probably we could have had a 600 points like this particular week. Generally speaking, it's only around 450 points or so. So right now we are already closer to the 450 points. and let's see whether there is some sort of a pullback from that particular level. And also this is a very important high, right? So this is an important high, which is 16,793. So closer slightly, because there was a fall, lower low compared to this. So there's a chance that we may look at some sort of a pullback, because the rally has already been 1, 2, 3, 4, 5 weeks of good rally has been there in the market. So expect some sort of a possible correction at around 16,000, a correction I'm saying, first towards 16,210, and then we have to see how it progresses, and then end closer to the next week or week after around 16.8 or 16.85, or probably extending itself to 17.1, 17.2, and then looking towards sort of a reversal at some stage or there. So let's wait patiently for that. And we've already said that once the market covers 5.5% rally or fall, and in that case the things turn around. So in this case the 5.5% came closer to 16,000. From 15.1 it came closer to 16,000. So there is a rally above that. And so whatever happened previously from this particular level, because this is the 5.5%, say 18,114 minus 5% was around 17,000, and below 17,000 this got covered closer to 16,000. And let's see what happens right now. Since the rally is now on its way, we should be already at 16.6, so that means 5% down is around 800 points. So 15.7, 15.8 should be, so should be a place where a bigger stop loss may have to come into effect. So right now I think we will keep it this way, that the rally on a short term can continue up to 17.1 to 17.2, but faces a strong resistance at 16,680 for the next few days, and then can fall up to 16,210. Then subsequently it can move closer to 16.8 or 16.85 before this month end, or probably extend itself right up to 17.1 or 17.2 next month before it starts to again look towards some sort of a reversal. So the smaller stop losses is going to be 16,520 for tomorrow, extending onto Monday at 16,515, progressively by 35 points every day from then. And then after the fall happens at 16,210, we can review for a long thing and see how it behaves around that, and then go ahead with it. Now we will look at the Bank Nifty. This is one this is one index which has outperformed compared to Nifty, and is looking definitely much stronger even than Bank Nifty. And we have seen this particular week high has been taken. So that means on any correction, Bank Nifty looks to be a buy. Bank Nifty looks to be a buy on any correction right now. So we will wait for Bank Nifty to correct itself before we go on the long side. And right now we will look at the same trend line thing. The weekly chart. We will look at the, see this. We will take this high. Look at this last two important, this one, right? So Bank Nifty, if it falls next week, okay. Next week, if it falls, we will have a support very closer to 35,350. So next week, 35,350. Watch for 35,350. A bounce from that can again become bullish. 35,350. Now the on the where it is expected to find some resistance, we will look at the so now the next resistance, slightly minor resistance, can come 36,750. 36,750, and then this one, and subsequently 37,500, closer to that. So these are the important places which should be monitored for big change in the trend, and this is the place from where again the rally can take place if it falls. So these are important levels in Bank Nifty that you should watch for. And on the daily situation, so okay, so now this place, yeah. So yes, right. So this is the place where you are placing it right now, the trend line. So any fall which is below this, okay, below 35,875, below 35,875, or this is a gap. See, if the gap is likely to be closed, then it could become a strong reversal, generally speaking. So that comes to 35,750. So 35,750 is the first stop loss. We will put 35,550 as the first stop loss for the time being. This is the 35,750 is the first stop loss now. And then look at the let's look at the Fibonacci, this one also. So now let us say from this place it has rallied from 32,290. It has gone to 35,543. Three two 53, and keep the nearest Fibonacci number that is coming is 35,718. So that is the same place where we are keeping it here. 35,760. So approximately 35,750 is the place where the first stop loss is likely to come. Well, first stop loss is likely to come, and the resistance can come at 1,775 points from this level, which is plus 34,463. That is 36,239. So the first now will come at the resistance can come 36,250, then four, 36,510. This is approximately same thing. So that is 6,510. So I think we are looking at somewhere at this. Okay, so 36,700, 750 looks to be a very important point, and which is corroborated very close by a Fibonacci number also. So please be careful about at this particular level. Look for some reversal place. Similarly, if it starts to fall below 35,750, which is the gap place, then in that case you can put in a short-term stop loss. But after that, another 400 points down, it can come closer to 35,350, and then probably take support and rally from there. So this is as far as Bank Nifty is concerned. Similar to Nifty, since Bank Nifty also has climbed quite steeply, we are not advocating any buy position at this point of time, because at some stage that there can be a fall. So wait for the fall to take place closer to 35,350, and then we will look towards being on the long side. Bank Nifty on relative basis is looking much strong. There are many stocks in Bank Nifty led by ICICI and SBI, which are now above the 200-day moving average, which we will see right now. So ICICI Bank put the indicator right now. So the 200-day moving average, you see, now it started to trade above the 200-day moving average very significantly. So unless it really closes much below the 744, 745, no, the rally is likely to continue. The rally is likely to continue, but the first stop loss can come below this high. That is, no, we should be careful. The first stop loss for ICICI is 772. The first stop loss at this point of time is 772. A very tight stop loss is this. A very tight stop loss is this, because normally 2-day low is also put as a stop loss. So if the the stop loss, the trailing stop loss can be put on a 2-day this one also. So I think we should be quite careful about this. So any fall which is below 780, the first stop loss is below 780, and the second stop loss is above this, below this 771. So ICICI is also looking quite good, with a 2-day stop loss coming closer to 780. 780 is the first stop loss, followed by 770. But there's good chance that it can come up to 745 before it starts to rally. So we should wait for a fall up to this. By the time market could have corrected at least 5-6% in as far ICICI is concerned. Generally speaking, if the market corrects by 2-3%, then ICICI can correct by 5-6%, because they are high beta stocks. So it is better for us to look towards some sort of a waiting as far as ICICI is concerned before we go on the long side. Now the big picture is very is a little bit clustered as far as banking stocks is concerned, but generally now they have started to look good. So ICICI, SBI are leading the rally. So please wait for a fall before we go there. Now let's look at the auto stocks. Particularly we look at the Tata Motors now, which we said will start rallying. So Tata Motors, it has come to this level, right? So now we can buy even above 455 tomorrow and put that low of 450 itself as a stop loss, because it is if it starts going above that, then it becomes a below this 450. It is going to be a 2-day stop loss. One. Second thing is that above 455, it is buying above a corrective high, So chances that it will still go up above this particular high. So we can go for a long above 455, keeping 450 as a stop loss in Tata Motors, because some small correction has taken place. So we can look towards going on the long side. So Tata Motors above 455, stop loss 450. We can look at it. Now same thing if you look at it, this trend line has to be cut for a slightly bigger fall, and that is now coming very closer to the 437, 438. So a bigger correction could get altered closer to 437, 438 levels, and okay. Okay, so this is the so if the script runs very closer to this particular trend line, then in that case you take profit, because from there can be a pullback. So normally what you do is in a slightly bigger bull market situation like this, then in that case you look for some sort of a 2-day stop loss or a 3-day stop loss, whichever you can you are a little more comfortable with it. you can look at that thing and then probably go ahead with that. So a 2-day stop loss can be a little more effective as far as instead of a 3-day stop loss, it could be a 2-day stop loss also. In some cases a 3-day stop loss looks effective. So you can use the trend line also for that purposes, and the trend line now suggests that we should be looking towards the bigger stop loss below this high, which is coming at 444, and the smaller stop loss comes at 450. But Tata Motors is looking good, because if you look at the monthly chart also, now it is now looking towards going above 462, and it went up to 461. So any break above 462 means it is a buy on dips. So Tata Motors is now getting into a buy on dips stock. Okay, so that is also turning around. And let's look at Infosys. So Infosys right now it looks to be looks as if it is still on the shorter side, because it has broken this particular thing. But the candlesticks, because you got two big long shadow candlesticks, 1, 2, right? And this month also it is looking good. So it is corrected from 1953 to 1367. So 600 points divided by 1953, which is around 30% correction has taken place. So maybe it is looking good enough for investment potential, and it is also going above the likely to go above the 1555, which is the previous month high. So which itself is a good sign that probably a bottom is forming. So we can go with a 1555 for investment, keeping 1461 as a stop loss, also as a stop loss. So Infosys is emerging to be a good investment candidate because of its fall. Same thing cannot be said very clearly about TCS for the time being. Let's look at TCS. TCS this month, no, you're getting a long shadow till now. We didn't get it. And if it is going to close above this particular low, then in that case it's going to be good, 30-20, 20-22, 30-23. And TCS also is forming very important long shadows. If you look at, this was a long shadow, long leg on the downside, which we call as a classic hammer patterns. And this is also a hammer pattern. This is also a hammer pattern. So all the 3 months we are seeing some sort of a pullback towards the close of the month, and which itself is a good sign that probably we are also looking at some sort of a bottom, and the rally can take place once it starts moving above this particular high, that is above 3350. So this month high, which is 3333, and now it's at 3177. So if it starts to move above 3350, it becomes a buy. Above 3350, it becomes a buy, right? Because it fell below this low. So above 3350, TCS is a buy. Okay. So please watch out for IT stocks turnaround. Okay. So this is as far as IT sector. We have identified Infosys as an important place. Watch out for Tata Consultancy. Now we look at Reliance. HDFC Bank and HDFC have not participated much. So we have got into stocks like momentum stocks is for scripts like Tata Motors and ICICI. The investment stock now is getting back into Infosys and TCS. Reliance as usual, but Reliance results is going to come on Monday. So we need to wait and see how it is going to perform. But we will have a clear resistance coming first at this level, which is the 23, which is the 2567. Now, last month, if you see, the close was 2595. If you remember, I said the 3 times the option price if it starts to go down, or even 2 times the option price or 3 times the option price if it goes down, then you can look towards being on the buy side of the thing. So last time it was 25.95, and minus 180 is itself is 2415. 2415. We said that mostly it can close above 2415 this month. So anything which is below 2415 itself becomes a buy. Okay, and then if you go for 3 times the option price, then in this case which is a slightly deeper one, it is 2325. So this is what if you recall, we said no, if it goes up to that level, you go for a buy. And no, it did not come up to 2325, it came only up to 2365, but we said there's a very good chance that it can close about 2415, because that was twice the option price, and right now it is 2486 or 2486. So this is the way probably you have to look at an analysis both from the option point of view, which gives you the extremely oversold, overbought positions in the market. Oversold and overbought, oversold positions will be highlighted with the help of the option prices, and good stocks should be looked towards being bought at that point of time, at that levels. Okay, and that is why if you see even scripts like TCS and all, at lower level they are all getting the bounce, because it is going to that extent of 2-3 times down the option price. So just look at this particular month close in scripts like TCS, and once it is for example, let's look at the option price itself right now. See, NSE option price, CD option price, we'll put, let's see, now we'll look at the next month. This is 1 month from now. Now at the money option looks to be something like averages around 80 rupees. So if it goes by 200-240 rupees from one particular previous month low, then in that case it becomes a good buy. Now let's look at the same analysis from the last month perspective. So last month the close was 3267. So 3267 minus 240, we expect it to be 3024, 3027, right? And the general expectation is that it will at least close 80 into 2, 160. So 160 means 3267 minus 160, 3100. 3100 or so. So but if it goes much lower than that, then it becomes a buy. 3025, 3030 levels is where we are looking towards some sort of a buy. Now it went up to 2953. I told you 3022, 3023 levels for this month. So once it started to go right up to that level itself, it became a very good buy. It became a very good buy. And if you look at even similarly the previous month, it was 3364, and it came down to 3023, which is much lower. It's much lower, but then it pulled back to 3267. So that is a deeply sold. So those who are looking at buying for that particular month for some profit, you should look at it. So it was the close the previous month was 3364, and expectation was 160, 170 points from that level, minus 150 points, around 3200. So last month also we are expecting 3200 to be the close. Okay, so it just closed about 32. So if you buy at some level below 3200, would have still made profit of 100-200 rupees possible. So 3 times the option price if you buy. In case if it goes down, then in case it becomes a very good buy. So now here also, if you look at it from the it started to fall from the high, which is 3477, and it fell to 3023, which is around something like 400 points. Which is even much more than what probably the market was looking for. So from this place it was 3364. So we minus look at 240 points, minus 240, 3 times the option price. It would have been 3124. So around 3124 if you had bought, then in that case, even if it fell down, we are able to get closer to 3260, 65 levels, right? So we are able to go for a buy here also. Based on all these things, you can make, for those who are not familiar with charting and other things, you can use the option price itself to know to where the support and resistances can come, or deep pullback or oversold levels will come, and based on that you can look for a buy. Okay, so this is the situation for the day, and we are seeing some pullback right now in S&P, which could probably also reflect in the Indian markets tomorrow. So please keep the today's low plus another 30 points, 16,525.30 as a stop loss for tomorrow's trading. Okay, in Nifty. Thank you very much. So you may ask your questions now. So thanks. Happy weekend tomorrow, and looking forward for a discussion again next week. Thank you very much.